Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Wednesday, 27th August. Coming up on the show, the markets are braced for Nvidia's results. The tech giant reports after today's closing bell. Tariff wars continue as the levy on Indian goods coming into the US hits 50%. No one looks like backing down in the battle between President Trump and Fed Governor Lisa Cook. And Cracker Barrel makes a U-turn on its controversial logo after Trump weighs in. So grab your coffee and let's own the morning. Okay, so let's start with our big story of the day. No, we're not talking about Taylor Swift's engagement, but Nvidia's earnings. They're out after the closing bell. It's easy to see why the market's focus is on just one company today. Not only is it the world's leading AI chip maker, but last month it became the first company to see its market capitalization top $4 trillion as it cemented its place as the world's most valuable company. The company accounts for around 8% of the S&P 500. That's a whole percentage point more than its next largest component, Microsoft. It's clear that today's results will act as a bellwether for AI demand, but it will also have a big impact on the markets. Nvidia's stock is expected to post its biggest post-earnings stock move in over a year, according to recent options pricing. That could translate into a market response that resembles that of a pivotal piece of economic data, more than a single company's earnings report. Options data suggests traders expect the S&P 500 to move about 0.9% in either direction. Tony Wang is portfolio manager at T. Rowe Price. Here's what he's expecting later.
Yeah, I think in the near term, I don't think anybody is really concerned about demand for the rest of the year. I think demand continues to outstrip supply. It'll probably be more about the cadence of product delivery, how to think about 26, if anything, the growth there. And then also, the China revenues in terms of the timing of that. I think there's some noise in terms of, what SKU or what product they're going to order. But I think that's a little bit more short-term stuff. But over the long term, I think what matters is that, less competitively, I think is what the market's concerned about, but more the demand in 26.
Mm-hmm. Now, you did flag power constraints and supply bottlenecks as top concerns for the outlook here. How big of a threat could that be to Nvidia's growth story, especially as we look beyond 2025?
Yeah, I think that you're seeing a few companies in the last earnings season, talk about really strong demand, but perhaps like there are bottlenecks in power, or maybe there's a golden screw issue. And so, those things can happen when demand is outstripping supply. And so to me, those generally get worked through, but it is something that can create some temporary kind of changes in the supply. So to me, I think it's kind of a near-term concern, but over the long term, these things do get figured out and they're not problems that are impossible to solve.
Okay, before we get into the things you need to know before the opening bell, just to remind you that we have an interview with Jensen Huang, the CEO of Nvidia, after those earnings drop. Okay, first up, we're talking tariffs again, this time India. US President Donald Trump's doubling on tariffs on goods from India to as much as 50% took effect today. That's very likely to escalate tensions between the world's two largest democracies and strategic partners. The levies will hit more than 55% of Indian goods shipped to the US, India's biggest market, and hurt labour-intensive industries like textiles and jewellery the most. Key exports like electronics and pharmaceuticals are exempt, sparing Apple's massive new factory investments in India for now. The reason for the punitive rate? Well, Trump is unhappy with India for buying Russian oil, which he says is funding Putin's war in Ukraine. Many analysts believe that the billions of dollars India saved by buying Russian oil will be wiped out by the tariffs it now faces from the US. Well, we're sticking with oil for the next thing you need to know about. Goldman Sachs expects the price of Brent crude futures contracts to decline to the low $50 a barrel by late 2026, due to an increase in surplus of oil next year. It's estimated that stored oil in member countries of the OECD will account for a third of total global stock, or 270 million barrels in 2026. Goldman also believes that demand will be lower. And finally, another major story to watch today, the Trump-Cook feud is rumbling on. The president said he was prepared for a legal fight with Fed Governor Lisa Cook after he moved to oust her from post following allegations that she falsified mortgage documents. Meanwhile, Cook's lawyer vowed to file a lawsuit over the president's actions, and Cook herself said she won't resign. The Fed, well, it said it would abide by any court decision and has deferred any decision on Cook's current working status. Our Washington correspondent Ben Werschel breaks it down for us.
What we appear to be setting up here is kind of a two-stage battle in the months ahead. First is this immediate term question of whether Trump can fire Lisa Cook. That's clearly going to court and is going to be contested over the coming weeks. And then there's this February deadline that you mentioned. That is when the regional Fed presidents' terms expire. They have 5-year terms that are usually kind of a non-event. February on years that begin in 1 and 6, the Fed presidents are largely renewed usually, but there's going to be a lot more focus on that, especially if Trump can succeed here and install 4 allies on the 7-member board of governors. Basically, these regional presidents are chosen independently, but they do have to be approved in Washington by this 7-member board. And if there's 4 Trump allies on that, there could be a lot of questions about how that goes forward for these 12 governors, or these 12 presidents, around the country. They make up 4 seats on the Fed each FOMC meeting, so they have a big say in interest rates. And this is going to be a question here. There's some skepticism about whether there could be presidents could not see their terms renewed, but there's clearly going to be a leverage point here for Trump and his allies, not just on the 7-member FOMC, but this wider universe of Fed presidents.
For market movers, we're going to focus on earnings that have just come out. We start with Kohl's, the department store chain. And net sales were expected to come in at $3.31 billion for the second quarter, and earnings per share was predicted to be 31 cents. In fact, it was quite some beat on the earnings per share mark. It came in at $1.35, and actually it was a beat on sales as well. 3.35 billion was the actual number. But it's worth remembering that yesterday there were reports that Kohl's was asking vendors for more time to settle invoices. This was all part of its plan to try to turn its business around. Okay, next up we have J.M. Smucker, the company, better known as Smuckers, the maker of food and drinks products. The street was looking for adjusted earnings per share of $1.93 off net sales of $2.12 billion over its first quarter. It missed on both counts, actually. Sales came in at $2.11 billion and earnings per share at $1.90. Remember, a number of its peers in the shelf-stable food segment have already reported Q2 earnings. Both Hershey and J&J Snack Food delivered earnings beats. And finally, we have results from Canada's largest bank, Royal Bank of Canada, or RBC. And on the adjusted earnings per share measure, the bank easily beat expectations with a reading of $3 Canadian and 84 cents. The market was expecting $3.25. The bank said it saw strong growth across each of their business segments. Okay, it's time for a quick break, but stay tuned to Yahoo Finance for our upcoming trending tickers and the latest news on SpaceX. Welcome back. Well, this week we've seen a slew of corporate deals. Just today, CNBC reports that Canada Goose is receiving offers to take the fashion brand private at a valuation of about $1.4 billion. But what do these corporate deals mean for your money? Well, my colleague Jared Blickery breaks it down in his latest episode of Stocks in Translation.
Deals are back, and this week, Keurig Dr. Pepper unveiled an $18 billion bid for coffee maker JDE Peet's, and global M&A activity has already hit over $2.5 trillion this year. But what's really behind a merger, an acquisition, or even a bankruptcy? On today's Stocks in Translation, we're going to turn headlines into your playbook, and we're going to break down what happens to your shares of a company when a big deal is made. Now, to begin with, we're looking at 3 different types of corporate deals. We have going private, then merger or acquisition, and finally, bankruptcy. We're going to ask the same questions every time. What do you get and what do you do? So now let's open door number 1, going private. This is when a company, a public company, is bought and leaves the stock market. Holders are paid in cash at a set price, and trading ends when the deal closes. What you see is a limited time invite to sell your shares, called a tender offer. It has a set price, and if too many people accept, you just get a partial fill. If you own the shares, you're going to be notified, but pay attention to the deadlines to make sure you get what's coming to you. A great example is Tesla. Remember 420, funding secured? That was a 2018 going private talk when Elon was dropping hits about taking Tesla private with Saudi money. Never got off the ground, but the mechanics are exactly this: a cash number, a clock, and a choice. Now behind door number 2, we have a merger or acquisition. It's when another company buys yours, and you might get paid in cash or stock of the buying company. What you see is a merger announcement and the shareholder vote. And if there's a choice to be made, you vote. Sometimes you can elect cash or stock. Sometimes you just have to roll with the punches. In cash deals, you're going to get cash. And in stock deals, you get shares of the buying company. Sometimes it is a mix of the two. And make sure to watch out for what's called the record date, which is the cutoff for the votes that gets to vote. Also, you're going to want to watch out for any election deadlines. A recent example is Microsoft buying Activision Blizzard. Mr. Softy, or Microsoft, announced it in 2022, then closed it in 2023 at $95 cash for Activision shareholders. Since they were cashed out, they did not get Microsoft stock. Now, finally, behind door number 3, guess what? We got bankruptcy. Real quick, there are 2 different types. Chapter 11 reorganizes a company and often cancels old common shares. Then you have Chapter 7, which liquidates the entire company, and common shareholders are usually wiped out totally. What you see is a notice of either a Chapter 11 or 7 filing, and sometimes a ticker gets a little Q at the end of it. It's kind of like the scarlet letter for reorganization. And if you get access to this new bankruptcy ticker with the Q, your broker is going to show it automatically. Usually there's little or nothing for you to do. And some people trade the Q ticker in the over-the-counter market, but be careful. It's very volatile and tied to court decisions, so traders are warned. Also, watch out for what's called a plan approval, which is a court sign-off, and the cancellation or effective date when old shares officially disappear. Famous example is GM's Chapter 11 bankruptcy over the global financial crisis. The shareholders were wiped out in 2009, and this max chart on your screen shows that trading started all over again with a 2011 IPO. Now, here's a rapid-fire reality check in our final shareholder showdown. In a cash buyout, you're going to get cash in a stock swap, and you also get shares. And remember, sometimes you can get both cash and shares. And then in bankruptcy, there's really not much of a deal to be made with you, as you're likely not going to get anything. Bottom line, remember to always look out for those shareholder notices in your email or physical mailbox. And anytime you get cash, guess what? Uncle Sam is probably going to take a cut in taxes. New shares are often tax deferred, but when in doubt, always talk to a pro. That's all for today. And tune in to the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
Time for a quick break, but stick around for today's trending stocks. Welcome back. Time to dive into trending tickers. Today we start with an AI company that's gaining momentum, MongoDB. Shares of the database provider are soaring after its latest earnings. Shares jumped over 30% after hours as the company smashed expectations. Earnings per share came in at $1, well above the 67 cents forecast. Subscription revenue grew 29% year on year, with its Atlas Cloud service now making up 3/4 of the total. Goldman Sachs quickly lifted its price target to $325, so Goldman sees a lot of growth potential here. To put this into context, MongoDB had been under pressure all year amid software sell-offs. This latest quarter puts it back in the AI-driven cloud growth story, and investors are rewarding it in a big way. Okay, next up is Okta, the security software company. The stock is up over 5% in the pre-market after Okta reported strong numbers too. Q2 revenue came in at $728 million, beating estimates, with earnings per share at 91 cents, also a beat. The bigger story is guidance. Okta lifted full-year growth targets to 10 to 11%, and analysts upgraded the stock to a buy. After a tough run last year and in recent months, Okta is finding new confidence as enterprises double down on identity verification in the cloud. It's becoming a clear beneficiary of the AI security push. And finally, Cracker Barrel. The stock of the restaurant chain is up around 6% actually this morning, after surging as much as 9% yesterday. What's behind the move? A logo U-turn. The company announced it will bring back its old-timer logo after a customer backlash against a minimalist redesign, and after even President Trump weighed in on the debate. Trump publicly called on the company to reverse course, saying Cracker Barrel should, quote, admit a mistake. The combination of consumer nostalgia and the president's comments gave the stock a real bump after the stock had fallen more than 14% last week. And it definitely hit a raw nerve with many people in the US who, like the president, took to social media to express their views. Yahoo Finance's Josh Lipton spoke yesterday with Marcus Collins, Professor of Business Marketing at University of Chicago Ross Business School.
I do think that Cracker Barrel has a chance to stand for something or to bend to everything. They made decisions on behalf of the brand because of the situation it was in with regards to his business. The business wasn't doing well, and it hasn't been doing well over the years. And just like many companies who go through a rebrand, they try to signal new meaning about what the company is and its products in an effort to get new people to come. Because the people who are complaining about these changes, they probably haven't been in Cracker Barrel in a very long time. And the reason why they have to change is because people like you weren't going.
Well, if I accept the idea, Marcus, they need to change. Even if I accept that, was this the right change, this rebrand?
Well, what is the rebrand, actually? Did they change the logo? Yes. Do I like the logo? It's minimized, and there's a lot of minimalism that has been used by brands when they have changed themselves to be more contemporary, to be more youthful, to get new people to come in. And when they realize people who are normally coming to Cracker Barrel, particularly elderly folks, don't come to the restaurant as often. They don't eat out as often. They needed something new. What are brands by their very nature? Brands are vessels of meaning. They try to signal something about themselves to resonate in people's hearts and their minds. Sometimes we change the iconography. We create new campaigns, new languages, new products in an effort to signal something new about this brand. Did Cracker Barrel need to change? Absolutely, 1000%. Would I have recommend getting rid of everything? Maybe I keep the barrel, right? I don't know if you keep the guy, because who is the guy? I mean, the guy's name is Uncle Herschel. My dad's name was Herschel, and even I don't feel connected to it, even though I am a Cracker Barrel fan and an avid consumer. So we talk about these things of change. Change is necessary when things aren't working. Anyone in business would tell you so.
So, who will win the race for weight loss drugs? It's been a difficult year for the pharma industry, with tariffs on one hand and heated competition for drug innovation on the other. Now there are some developments for two key companies that are at the heart of the global race for thinning and diabetes drugs, Eli Lilly and Novo Nordisk. While Novo Nordisk has been going through a major crisis, Eli Lilly has been pushing ahead and just announced some positive results from a study. Our senior health reporter Anjali Kamlani shared the latest updates on the Market Domination Show.
Eli Lilly gave us news today that for those with diabetes, the weight loss from its pill orforglipron is about 10.5%. And that compares to the recent results we got from Eli Lilly for those who are just using it for weight loss, with a weight loss of about 12.4% of total body fat. And so that really puts the company in the lead for possibly bringing its pill to market first. We know that the company has now said that with these two results in hand, they're going to be able to file globally for approval, including with the FDA, and that is on the timeline that we have already heard. They did say later in 2025. And meanwhile, we know that this compares to others that are pursuing similar drugs like Novo Nordisk. Of course, those two have been head-to-head in the GLP-1 market, and now this could really break out Eli Lilly into a lead. We already know if you compare Lilly's products, Mounjaro, which is used, an injectable used for diabetes and for diabetics, that gives about a 15% weight loss. Meanwhile, Zepbound really broke out with that 20% or more for injectables for those with obesity. And so now adding orforglipron to the lineup really puts the company ahead. So we're really watching to see how that does. Viking Therapeutics is also another one in the game, and they got a bit of a boost from these results too, because it really is setting a bar, is what analysts have said about these results.
And Anj, we also heard from President Trump earlier about lowering drug prices, and he did also mention Eli Lilly, correct?
That's right. He did mention Eli Lilly, but more in context of Eli Lilly's executives. He mentioned having a conversation with them in talking about drug pricing in most favored nations. We know that he's been pushing the industry for that and talking about, the mandate he basically gave them in a letter 60 days out to reduce prices to European nations or other developed nations. He mentioned with regard to Eli Lilly, quote, "I was with a very great gentleman from Eli Lilly. I think he's an incredible executive," and on and on. But he basically talked about how between his first term and now, he's had these discussions with pharma executives like those from Eli Lilly, saying, quote, the executives basically threw their hands up in the air and said, "You're right, I can't defend this anymore." So that's a really telling insight into how he's been negotiating with these executives. Meanwhile, we also know that he's talked more about this most favored nations clause, and he's said very confidently in the meeting today, quote, "Your costs are going to be going down for prescription drugs at levels that nobody has ever thought possible, and we're all set with the companies," basically indicating that he's had discussions about this with the companies. And then he also mentioned something that was interesting, and that was, "and the middleman gets cut out." That's about PBMs, which we haven't heard much about, but it basically indicates that he has had conversations about that, and we might see more to come in that space.
Well, before we get a final check on the market, some news overnight from SpaceX. Take a look at this. SpaceX has pulled off a successful test flight of its newest generation rocket Starship, reversing a trend of disappointing failures. The world's largest and most powerful rocket blasted off from Texas just after 6:30 p.m. local time for a nail-biting 60-minute flight. Over to the markets now, and let's start with Asia. In Asia, it was a pretty mixed day, but the big story coming out from the region is that China's chip makers are seeking to triple the country's total output of artificial intelligence processors next year as Beijing races the US to develop the most advanced AI. That's according to the FT. Okay, let's turn over to Europe now. And European markets shed early gains to trade lower this morning. Traders clearly gearing up for those quarterly Nvidia results. According to Bloomberg, the European Union will seek to fast-track legislation by the end of the week to remove all tariffs on US industrial goods, a demand made by President Trump before the US will lower its duties on the bloc's automobile or exports. And on to the US markets now, and they are clearly in wait-and-see mode before those Nvidia results out later. Just have a quick look at the Nvidia stock price as well. Over the last 6 months, Nvidia shares have gone up around 38%. And hopefully, Jensen Huang, he'll be speaking later to my colleagues at 6:30 p.m. on Yahoo Finance, hopefully wanting better performance. And what can stop it if the earnings do come out as a beat? Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Ali Kanal ahead of the market open on Morning Brief. And stay tuned on Yahoo Finance for our interview with Nvidia CEO Jensen Huang. I'm Ramzan Karmali. Go own the morning.